All right, welcome to the Euro Trade. Happy Monday. This is 9th of June, 2025. So we're going to kick off the stream by doing some analysis for the upcoming week on my alternative products. Let's do the screen share. And I have dogs joining for the discussion. Just see if we can sort that out. If we're meeting for the first time, my name is Deeyana Angelo, aka Macroeconomic D. I've been trading for 18 years and I'm a commodities trader. I'm not really an equities trader. So I will be focusing on copper, gold. We might touch upon DAX because I do like to trade DAX during London. However, equities are coming into rollover, so it might be a bit of a weird week going into this part of the year. And of course, we have a possibility for some doldrums when everything goes quiet. And because of that, I will probably be more focused on gold, because gold doesn't necessarily suffer as much from the liquidity dry up during the summer months as much as some of the other products. So with that in mind, let me just keep an eye on the chat as well. Kind of feel like I need to add another screen to try and smush everything in one go. I swear I left chat somewhere here, but I don't know. There it is. Okay. Let's put that here. Okay. Let's see who's in chat as well. Say hello to everybody. So we have Chad Farmer who said first. Excellent. Obviously Bruno has posted the risk disclosure form. And yeah, so I will remind you that anything that you have an opinion on, it should be your own. Don't follow blindly any plans or any trades unless you also agree and your plan also agrees with the analysis that either of us present on the TopstepTV. G-Wiz is saying good morning. Nicholas Rona is also saying good morning. NT-Up Ace, Stock Pursuit. Clarence, Yusuf, Alexander, welcome everybody. All right, let's expand this gold chart and start from a massive time frame to see what they're trying to do here. Let's go monthly. And let's also go get rid of some of these old drawings that were there from 1,000,000 years ago. A lot of selling wicks on the monthly chart for now, certainly in the previous two candles. Look at that. Now, I would call this a distribution. Have we found the top? Did the gold find the top? Unpopular opinion. I don't know. We'll see. I mean, it certainly spent enough time in this area. And for now, gold is having trouble going past 35.41. So it looks like that 3,500 is maybe the top for now. Every time we came anywhere close to it, they shy away from it. They kind of move away. Okay. Just texting the husband to keep the dogs a little bit more quiet. Yeah, so every time they came close to it, we tried to go over it, sold off quite a lot. Remember, this is a monthly chart. It's just contextual, so we're not going to be taking trades from this, but it gives you a good directional bias of what we might be looking at. The following month, this was May. Again, tried to get up to it. Didn't even get back to 3,500, but instead topped out around 34.75 and then immediately came back. Similar thing we're seeing now for the June month. So we tried to get up to 34.30. Couldn't get over that. All of this is creating lower highs. So just purely from a technical perspective, I would say we found a localized top, right? On the weekly chart, it looks even more like a distribution, so it's definitely a sideways activity. And here is where maybe we can start to find the edges of this range. Now, there's a couple of ways of doing this. So obviously the range of the candle bodies is the real indication that we cannot break through the extremes. But when it comes to actual trades, I would prefer to be closer to the 3500, which is the top of the very high of the area, and then to the low side 3153. So that's what you're that's what you're working with. Good morning. Yes, more coffee required. So that is the extreme of this range. Now, can it actually float into sort of a second standard deviation from this range? Probably. And can it actually sell off or get back into longs from that volatility band? Probably. That's also, one of the ways that you can trade ranges, especially when it's like such a large time frame, because you're not going to be getting the opportunities intraday to play pure extremes on the weekly range. But it's a good reminder that we have something there that could be causing some troubles. Did anyone notice a new font on Topstep X? Is that just me? Or did we go into a different font? It's definitely different, isn't it? Weekend update. Right, let's move on to the daily chart and try to find some quality supply and demand areas here. We built up a lot of volume. So let's just do this as well. And on this particular chart, I just have the visible range. But if I go to a slightly bigger time frame, there will actually be sort of three areas. Let's see. Three potential areas where I can see volume. One is where we're at now. So this is building volume. The second one is sort of in the middle from, let's say, ballpark 1390, and then all the way down to 3000. There's also another middle one which kind of smushes back in with the 3000 level as well, but it's a separate distribution. So we have like three high volume areas that could be of interest in case we start to move down, or obviously we start to move back up. We can look for the lower volume node at 3470 as either kind of a line in the sand. We're either going to go higher quite quickly through it, or we're going to touch it again and reverse. But whenever you have a low volume area, you can expect fast market movement. Which side? Usually on the first touch, it's a reversal, but subsequent touches, second, third, it increases the probability of the market just bleeding through it and going much higher through the low volume node. So keep that in mind. The number of touches, it's a concept that works across the board, regardless of the time frame that you're looking for. Do I see any high quality zones here? Well, I see an offspring zone that might be okay. So I see this supply that had a pretty decent move away from it. Is it big enough to actually say, oh, I want to run swings from here? I would say no, because it's kind of lacking the move away, which is also why I'm thinking this is all just one big distribution curve here, rather than some big opportunity for swing. Obviously, for a big swing, we would need the whole market to roll past 3155 and to hold below it, because if we just touch below it and then come back into the range to close the relevant time frame back into the range, that's still a range trade, right? So I wouldn't be banking on that necessarily this week. Maybe throughout the summer we see that, but hey, gold has been a little crazy, so anything can happen. ACH, and I I don't want to form any biases when things are going to happen. All I'm doing now is just looking at the factual picture that we already have. So I'm not going to be going, oh yeah, I think it's going to roll. I think this is the top. It's like, do we have a distribution curve that is unable to break 3,500 confidently? Yes. Anything apart from that would be conjecture, right? So we want to stick away from that. I'm probably going to trade quite late on my live today. So I've actually locked it up until about half an hour before the euro close. I'm just going to clear my throat for a second. And Maria joining us. Good morning. Good morning. Yes. Question: will we ever get pivot points? Now that there's the API access, I don't see why not. You know, if you have someone in mind, you can always reach out to that company and just go, hey, can you guys make this for Topstep X? So, you know, with the API access being open to everybody now, you know, a whole bunch of companies might start creating more indicators for Topstep X. We're certainly thinking about it, primarily because you can use any language on the back end and just kind of use the API bridge to do whatever you want. So yeah, maybe rather than reaching out directly to Topstep X for any custom indicators, you can now start to reach out to your favorite indicators people and go, hey, can you do this for us? Anne-Marie says, I'm also looking for a gold trade this morning. Took a quick short at the Globus Open, but looking messy. Yeah, the thing with gold, it has this weird start to the London session, and this has been happening for a few months now. London and gold are very hit and miss. I've been trading gold probably as long as I've been trading crude oil, maybe like a little bit less, let's say 11 years versus 13 years. But still, I know it pretty well. It has changed, like everything has changed personalities in the last sort of year. Ever since the election year began, everything started to shift. And we have seen some new behaviors, and gold is kind of in that camp. Gold is still very double-sided intraday, but it does offer really good opportunities on days when it just goes in one direction, almost like risk on, risk off sentiment, and it just keeps going, right? Whichever side that is. The problem with gold is that right now I am focusing on micros because the intraday candles on the 30 minutes are so massive. They're like, even if you have a range, the candle across like a couple of 30 minutes, it's like 135 ticks on one, like 170 ticks on the other. So how do you limit risk? You have to start nitpicking on super low time frames for precision and timing, and that's kind of what I don't like doing. Like at this point, I want easy trades. You know, I want trades that are obvious, and I want trades with high profit margin that has like an inherent, if we want to use the word intrinsic profit margin. Why? Because we moved cleanly away from one area to the next, and there's no speed bumps along the way. So that's kind of what I look for. Don't find them every day. So sometimes, you know, you're like looking at a range with a tight sort of 70 ticks range, and you're like, oh God, no, it's going to be a difficult day. And to be honest, with the most time, unless I'm on, you know, we're discussing either, you know, let's say I have Anne-Marie there, or I have JD, or I have Coach Jay, or I have Hoop, or whoever is with me, you know, we can kind of put our minds together and then find that trade from the perspective that everybody's looking at different things, but ultimately we all come to the same conclusion. But when I'm just by myself and I see a range day and I'm like, oh God, no. Not another range day. So I kind of like having my colleagues around me to help me find the best trade for the current situation in the case of a range. But if we have a swing possibility, if we have, you know, any kind of mean reversion trade, obviously those are very, very juicy. And I took a smaller mean reversion trade on Friday on gold, and it was great. I did wait for it to hit, what was the number, 3360 on the short side, and then it kind of happened during the lunchtime, but it also didn't quite hit the 3360. And I have a problem with that. So if I was an algorithm, and if I said to it, when over or equal to 3360, this is how my brain works, by the way, when over or equal to 3360, start looking for shorts. So then it gets to like 3359.5. The algorithm doesn't kick in. So therefore there's no trade there. That's how I think. And most of the time you will get price action that overshoots any levels that I'm looking at slightly before it then comes back. So that's what I look for. I look for when something hits my level, I give myself a task to wait for at least 10 to 20 minutes to give it time to react on that slightly more relevant time frame, right? Having said that, I've just noticed something on the Dow. We have an imbalance of 61. So we have 61 contracts sitting on, well, they just pulled it, but it was sitting at 33.42.6. That typically means that someone is looking for shorts because it could be, longs bailing as well. At this point, if I kind of put in the context of the distribution curve happening on a large time frame, maybe these guys are trying to get out of the previous longs. So that's kind of a good sign, but I see that they've pulled it now. So is it a spoof? I'm, very difficult to prove. So I don't know. Let's have a look at some of the options levels, whether we have anything interesting around here. Yeah. Okay, so intraday. I'm going to drop down to a 30-minute time frame. Now, since I'm not planning to trade this until COMEX, I am going to reference COMEX value areas that I have. Value high from Friday is sitting at 33.67. So let's mark that. Gonna change the color to beautiful purple. Beautiful purple. There we go. So that's COMEX. Value high. It's decent size value. Decent size. Value low is at 33.6. That's quite a number. We're dead in the middle of that right now. Now, if we stay in the middle of this value for COMEX, if we don't move past either of these points, it's going to mean a responsive activity day potential. High chance of responsive activity day. Again, taking in the distribution that we have on the weekly chart, we have a few overlapping values as well if I look at the previous ones. So yeah, I wouldn't expect super miracles, but at the same time, the value areas over the past 2 days, so Thursday and Friday, they are pretty sizable. They are, let me just measure this quickly. They span the whole average session range for COMEX. Whenever that happens and we open inside value, I don't find it particularly valuable to just go, well, it's inside value, I'm not touching it, because it's such a massive range. So what I do is I use the current day's TPO profile to help me figure out if there is an opportunity there rather than waiting for it to exit value. So it's a poor predictor of the open sentiment when you have an outlier sized value area. Does that make sense? Harmony says it's my first morning to join you. Welcome. Very good to see you. Rigoberto says if we had pivot points, this would be the best platform. I mean, I think it's a really good platform. So, Question, are you married? Yes, I'm actually going to have 20 years anniversary towards the end of June with my lovely husband, James. And we just bought a new house together. and we have 8 dogs together, and those sorts of questions usually come from people who don't realize that I'm almost 45. But thank you. It's, very kind. However, not single, very, very married, and very, very happily married. Yeah. Let's have a look at some of the more trading related questions. World King and One Top. D, what's the strategy and what time frame are you trading? I wouldn't classify me trading any particular time frame, because that's not how I trade. I base a lot of my decisions on order flow profile, tape, with some levels taken from either the auction theory and or supply and demand, which is also kind of institutional order flow on larger time frames. How did the institutions position their inventory, in which area, where did they stop, where did they distribute, where did they accumulate, and all that. It's all very order flow based, but it is my strategy that I've developed over the last 18 years. I started with supply and demand, then I wanted to go into intraday. Well, first I wanted to make sure that I'm timing my swing trades better. So I added the average daily ranges, which is a quantitative extreme on the day. And then many moons after that's happened, I really resonated with the auction theory. However, I moved it on from what it was. And whilst the original auction theory is kind of created on ES mainly, because Jim Dalton is an ES trader, I found that some of the concepts didn't work as well in my markets, in commodities markets, which was crude oil, RBOB, natural gas, gold, copper, platinum. It just doesn't, it's not a directional market with a persistent bias that has been going on for 40 years. Commodities go up, they go down. There's a seasonality component to them. So very, very different. So I do teach the Market Stalkers method on my own website. And it's not for everyone. It's definitely not for everyone, because it's quite... let's just say it has a few moving parts. So whenever a sheer beginner comes to me and they're like, hey, can you learn your method? I would say, just go for my very cheap introductory courses. And spend some time there, spend 6 months, a year, trying to, see if you can analyze the market in this new way. But for a lot of the newer traders, more novice traders who have only been trading for a few months or even just a year, it goes way over the top, because I look at it from a point of view as if it's a symphony with a whole bunch of different instruments in it. And then each instrument serves a purpose. I'm very data driven, so I'm a very systematic trader. I find huge comfort in that. And I will agree with Anne-Marie when she says, my gut sucks. Same here. Like every time I try to rely on gut, it just doesn't end well. So I rely on probabilities. I am very well acquainted with the probabilities of the different setups that I take for different times of day. I coined a concept of time of day is a level, which means that if you get a level that's reached, but it's the wrong time of day, when, let's say, reversals are just not seen from that area at that time of day, it doesn't have a condition, it doesn't have full conditions for the full setup, right? So that's kind of how I do things. Time frame wise, there are setups that I take that don't involve a time frame. Okay, they are typically setups that involve the break of the initial balance. So it's like, is that a time frame? No, it's just breaking a reference point. We don't need a time frame pattern. But if I am looking for a more mean reversion setup, I will wait for everything to settle down. And sometimes if we have a release, like I will try and snipe a mean reversion setup on DAX without waiting for anything, because it's very whippy during the releases. However, for most times when I'm trading, let's say into the Euro close or anything after 9 a.m. Central, which is after 3 p.m. over in the UK parts, because I'm in England, that would be something I refer to as the post-NY cut time zone. And I call that, like, I trade in like chunks of the day. I try never to sit in front of the screen for more than 2 hours, because I'm very mindful of my mental capital. So I would trade, usually I would spend about 90 minutes with you guys here and girls. Then I will have one big massive break, and then I will come back around literally like post NY cut time, sometimes even all the way into a euro close. And then on some days, if there's not much happening or I'm not seeing good quality setups, or even if everything is going like really crazy, it might be a case of me waiting until the final half an hour of the settlement for the regular trading hours for that product. So I may not trade until 6:30 or 7 p.m. my time sometimes. It's very contextual. But my methodology is all about developing a situational awareness in a trader. It's not about, hey, use my level, we go short, whip. It's not like that. It's literally, what do you see here? Are we at the time of day when this setup is a high probability? What do we have against the setup? I'm very big on looking at the setup from the point of invalidation. It's like, well, is this a true failed auction, for example? Like if we have the first hour of trading, that's called the initial balance in the profile concept. So you have first hour, and then we exit that first hour. You have two options. You have an option for a breakout, which is actually a lower probability setup. Why? Because trending days only really occur, like if we take the truly mad trending days across like a whole year's worth of sample size, they only occur like 8% of the time, especially in some of my commodities. But overall, you can get trending days that happen anywhere from about 30% to 30% of the time, let's say. 20 to 30% of the time is the norm. So if you're constantly going for breakout trades from the initial balance and then getting smacked on the face, you're probably looking at a version of a failed auction where the market participants, and it's all market making hedging activity, that's what drives it. So basically, if it smashes through the initial balance, then pulls back into it, and it just cannot go back outside of it, that tells you that it's not a breakout. It's probably a failed attempt at taking this further, in which case, if you look for volume to support the other side, so that failure of the auction, you can easily get a rotation all the way back where it came from, whether it's a short or a long. Again, that's very contextual. But then if you've already had a smash through the first side, so let's say we went down and then we went all the way up and then smashed through the top of the initial balance range, now that's no longer a possibility of a failed auction, but it is a range day. Okay, so that minimizes the probabilities of what can happen next. And the only time you can take a breakout in the case of a two-sided extension of the initial balance is if you get a huge move to the opposite side that holds pretty confidently. But in absence of that, I will totally do that kind of a range trade. Still seeing bigger size coming to the lower side. So now they're sitting at 33.40. And I mean, this is just a combine, so maybe we can run a hypothesis that that's going to get hunted, but it's not going to be the biggest trade here. Let's see. This is just like me kind of testing the waters to see. Now my system, in cases of looking for intraday trades on products that have 380 ticks available, 350 ticks available for the average session range. Let me just do some calculations here quickly. I would have to use anywhere from 60 up to about 80 tick stop. Why? Because it's a volatility adjusted stop. If I had 150 to play with, that puts me more to the range of using 35 to maybe 45 ticks at best, but usually like 30 to 35 would be the case. In case of gold, I expect a lot of drawdown upon entry because it's a very whippy product now. So whenever I'm trying a trade, I try to give it enough room to at least play out for about 30 to 45 minutes without whipping me out. So the idea is to have a stop large enough to make me survive for long enough so that I can figure out what they're trying to do with it. If your stops are so tiny, where you enter a trade and in a nanosecond you're out, that would be a problem with the stop size that you're using, because you're not supposed to be in a trade involuntarily for like a second. It means that you've either massively mistimed it, or that your stop loss is just not conducive to the current volatility of that product at this particular time. So yeah, that's the reason for my slightly larger stops. Now let's have a look at some of the options levels. I didn't see anything super good here. I see an HVL is basically the point where gamma kind of can shift from positive to negative and vice versa. And again, it can be a level that when it gets tested for the first time, it's reactive to the opposite side, but then every subsequent test pushes it higher into that new exposure. We also have put support at 33.30. That's an interesting level for me, 33.30. That would mean that we would be just below the value area low, and also we would be around settlement. So 33.30 would be my area to potentially look for further longs, right? And that's kind of where I'm going to put this little. This is just a feeler trade, so yeah, I didn't go into, again, combines for me are to test the waters, because I know that the first couple of trades that I do are usually just to feel how the price is going to move, so there's no point in me doing that in my life. And I will keep a pulse on this, but I don't plan on putting in any trades until COMEX arrives. Okay, so I tried shorts from wherever it was, and I am going to let this play out completely just to see what they want to do around this supply, because we do have a localized supply here. Are there any other options levels there? So let me just put this 33.30 on the chart. No, it's just evens, isn't it? And I mean, there is a GEX too at 33.40, so that can be a pretty strong one. Apart from that, I don't like. The next area that might be better is 33.70. So again, that would mean like a responsive short above the value high. Again, COMEX value. And this options level up here, that's also a gamma wall. Now the thing with gamma walls, there's so much interest there that it usually creates a ceiling for further movement. So if we are going to go into a proper short that's high quality, matches everything that we're seeing, not just kind of chasing and trying to figure out which side is stronger by popping in a trade, which is what I'm doing here, I would like to see my true serious planned out trade either from somewhere around this area. And by the way, currently my ADR high is also sitting at 33.67, which is only like 3 points below that core resistance. So I have multiple things telling me that maybe 33.70 could be a good short. In absence of that, $33.30 could be interesting as a responsive long. So you get down to, again, I am hypothesizing this. Let me just remind everyone, I'm hypothesizing whether today is going to open inside value. If we manage to get a good move during London in the next, 3 hours or so, 3.5 hours, and if we open below value, my sentiment would change, because 3370 at that point probably won't be possible until we accept value. So again, my situational awareness is going to shift of what type of a setup that would need to be in order for me to get involved, if that makes sense. So right now it's looking like responsive moves because we're still sitting inside value. A lot of it is to do with the location of price in relation to the previous day's value. Okay, value area is just a distribution curve where we spend most of the time the previous day, and that's what the value area signifies, right? So we had a big day, so naturally the value will be bigger, but as it stands now, we're still inside it. So yeah, 3370 longs might be stopped at that point, and then we can fish for shorts. That actually would be probably more comfortable for me, given the fact that we are in a distribution curve and that 70% of the time, again, 70% of the time, not 100, we go into a liquidation move after extended movement sideways. This put support, I mean, one thing I'm not liking about this put support is the fact that we have a swing low down at 3313. So structurally, this is the middle. But if it is a responsive activity day, it is likely that this might be a stopping point. But what's below it? Let me just see what's below it. Nothing. That is nothing. That is nothing. Yeah, the next kind of relevant level, I suppose it will be my ADR low, which is 32.95. So let's put that down as well. Whoops. Well, that is not what I wanted. I pressed the wrong button, isn't it? It's okay, I am sort of Eastern European. I'm Serbian, so I can make fun of myself. 32.96, let's say. 32.96. Style. We're gonna do. Where is that? Why do my lime colors always disappear? Here we go. Okay, so ADR low. So that's what I'm seeing is kind of like the next strong level, and the projected implied volatility for the day is 3309. So it's actually quite a bit lower. So I'm not sure about this put support. What is going on here? Is that? Oh yeah, okay. Losing it this morning. Okay, we'll need another coffee. I swear I just saw everything like just not moving, and I was like, is it moving? Did I freeze? Or did it freeze? Right. Coach Paul used the ATR. Yes, I know that Coach Paul uses it as a scalable thing, but I have a different way of scaling it. I don't like actually using small time frames on a single day that's projected over the last like 14 candles. That's how Coach Paul uses it. He uses a 5-minute chart, 2 times ATR, and then whatever. So for me, that is a slight. So I'm very pedantic when it comes to like coding things quantitatively and looking at things from a quantitative way. Whenever you're using only the current day's data, if you run into the so here's the problem that I see with that approach. I respect Coach Paul a lot, but I just haven't been able to make that work for me. In fact, one thing that does work for me is to look at a 30-minute ATR. And then I'm like, okay, how does that compare to the previous 10-day ADR and ASR that we've had over the next few sessions, over the previous 10 sessions or so? The reason being is that if you run into a period when you're rolling from one session to the next, which I do frequently, right? So a lot of the times I will be trading London into COMEX. So now you're basing your ATR on a 5-minute chart on a rollover between 2 sessions that have vastly different ranges a lot of the times, vastly different goals a lot of the times. And then you get the increase of volume in the first sort of couple of candles because the new session is starting and it has a lot more volume than the other one. But you've now based your stop loss on the ATR of the overlap volume, which is always a bit sketchy. So to me, from that perspective, it doesn't resonate with me personally. But that if Coach Paul's system has worked for you, it's a very good way to scale your stops to begin with. It's just that I've tried that in the past, and it's not just from Coach Paul. I actually heard that from another colleague back in the day when I first started in 2013 as a prop trader. I've been trading from 2007, but I only became I stepped into those sort of more professional waters in 2013. They were also using something similar, but I was like, but isn't that kind of mixing apples and oranges in a way? And then I sort out my own way that I'm more comfortable with, and I tested it to death, and I decided that that's going to be my way of doing things. So here's what I do. Again, this is all part of my methodology. I take the measure that I coined average session range, ASR, okay? And then I take it from the previous 10 days. How much range did we have over the previous 10 days? Once I know that number, I will then divide it by either 4, 5, or 6. And that becomes my maximum default stop loss. Not just default. So I have some people who are on the program right now, and it is not right now, but we've had a lot of people over the years. But every time they are looking at scaling their stops, they're like, right, so my default stop is going to be, let's say, I don't know, divided by 4, 5, or 6. And I'm like, no, that's the maximum. You can go smaller, you just can't go over it. And they're like, oh, I said, this is why I say maximum default size, not default size. It's not like do or die. We always use a million ticks for a stop loss in case of NQ. For example, NQ requires you to always drop it down to a much lower time frame to look at the market structure and then try and minimize that stop to a degree. It's not to just look at it and go, I'm going to use a million ticks today because we have 1,500 ticks of average range. So again, divided by 4, let's say, keep it pretty conservative. You would need to use 375 ticks, which is 94 points in NQ. That's a lot. But that's why in the cases of high volatile markets, we look at not just that measure, but also the measure of market structure. What's the day type? What's this? What's that? It's so many different things that we can do. All right, so this is now middle of nowhere. They are stopping. Is there a Asia high or something here that I can fall back on? No, there is not. That is not Asia high. And what is London doing? Let's see here. London is failing the auction to the upside with a pretty pathetic initial balance size of 82 on gold. Platinum quiet. Copper is sort of falling. In copper, actually, let's do copper because these are my levels now. I'm not going to be getting involved, so I want to see these 3 levels, right? So these are my levels of interest. 3370, also where my ADR high is located. So if we exhaust that, then stop, then bleed back into it. Brilliant. In case of a responsive long, if we open inside value for COMEX, then 3330 is the first sort of point of interest. If it just starts going lower, I'm not going to chase that. I am going to wait for mean reversion somewhere ballpark at least at 3295, so below that 3300 number, very nicely. And then we'll see whether things can settle down and then go back into the volatility bands and maybe get a little mean reversion back into it. And at that point, let's see what this does on the big level. How does that look on the daily chart? I mean, it would look like there is a decent chance of this newer range staying, right? So we'll still be touching the wick, touch the wick, Sounds dirty, doesn't it? Touch the wig. Touch the wig, baby. Anyways, totally went off on one of that. Yeah, so if we get to ADR low, it would be pretty conducive to using the daily range, the nearest one. And then obviously we have the lower one, which is on the weekly. Don't think that's on the cards today. But yeah. Oh, we have dogs outside again. Brilliant. But yeah. So I think the ADR low and the core resistance at 33.70, they would probably be nice extremes where we can maybe catch some bigger moves from. So let's wait for that. I've got that on the chart. Gonna save that. Let's move on to some questions, and then we're gonna go to copper. D, fault size. Yes. Thanks, Bruno. Steve Witt says, morning, silver appears to be the stronger of the four metals. Would you agree? Yes, but the reason why I don't cover silver here is because it's too big of a contract for these particular combines. So, if you get into it, like let's say silver is your baby, even a micro silver with the volatility that silver can exhibit, that XFA is going to disappear in like blink of an eye, right? So it's not the best product. I think micro gold, even if you're in a higher volatility, it tends to be more palatable for these particular products, as in like Topstep and other evaluations, not just Topstep but everybody. So I'm just cleaning up some stuff here before we go into analyses, because I see I've got like a ton of initial balances that are just hanging there from all the days that I've been analyzing. Yeah, so I would agree that looking at it, it is stronger, but beware that can change as we get into COMEX. We do have the LME, so London Metal Exchange, but they usually trade weird things. Like they don't really trade silver and gold that often until we get to the curb trading time. And that's kind of carried on. We don't have the LME open outcry anymore, but we still see the same behaviors that they used to have. So they would trade aluminium, copper, nickel, like a whole bunch of weird metals in 5-minute increments. That's how it used to be on the floor. And then they trade everything for about 10 minutes in that curb trading session. And the reason why it's called curb trading, it's quite a funny story actually, because back in the day, the traders, before there was an LME, this was like a long, long time ago, the traders would be in pubs doing their business, right? And then they would get a little bit too rowdy and loud, so the pub owners would kick them to the curb, where they would continue their shouting and arguing and, buying and selling and everything. And then eventually they decided to herd them all into LME, and that's how LME started. But the curb trading is something that still happens even electronically, so take that as you will. And I'm still seeing gold 33.40, that 45-60 contracts is still just like sitting there and then pulling it. See? There's a spoof there. How is that still legal? I want to know. And again, there they are. Here we are. Now we disappear. Here we are. Now we disappear. Yeah, so I'm still kind of a little bit short bias based on that, but, let's wait. It's Monday. Let's take it easy. Let's move on to copper. But Dejan says, do you know some company that offer IT jobs? I graduated in software engineering leadership in Switzerland. I would like to move to England if I could get a job. So I used to be I used to do IT recruitment. Now, when I was briefly at an agency to kind of learn how to do it better, we did have a lot of kind of managed accounts with quite a few banks over here, but I kind of shifted my focus to doing self-driving companies in the States. So that was my expertise as an IT recruiter. But yeah, so I kind of lost, and it's been years now, because the IT recruitment side that I had as a business fell apart during COVID because everybody went remote, and the type of jobs that we were hunting for, they were kind of systems engineers. They were, very specific, kind of using like LiDAR and a whole bunch of stuff. So it wasn't really banking related, but it was tech. So because of the involvement with the US companies, I kind of lost the pulse on what was going on on the UK side of things, because that was no longer my expertise. I was working with the US companies. So I don't know whether people are hiring. I think it might be a little bit difficult now. I know that Switzerland and are you Swiss? Are you Swiss? And, moving to England, if I could get a job. So I will tell you one thing very, very clearly here. If you're going for a job and you're not already in the UK, you have slim to none chances of getting it. So here's the thing. In the UK, London law states that they first need to offer the role to the person or any candidate available in the UK from the local pool of British residents and British people. If they cannot find it due to, the rarity of the expertise, they will then open up that job for the larger audiences, so to speak, basically looking outside of the pool of the British citizens and residents. And even then, like, anyone can apply for the role, but I'm just telling you from the point of IT recruitment, then whenever we tried to push a person who wasn't in Britain and already, either a resident or a British citizen, that was almost impossible. Very, very difficult, right? So, moving to England, if I could get a job, join the club. It's a very difficult thing. Everybody wants to be in London. Everybody wants to be in tech or in banking or something. And, it's a hugely competitive market, hugely competitive. So, also, are you new? So you say you graduated. Does that mean you are a younger person? So in that case, you might be able to get an internship somewhere, post-graduation. But, getting a great job from the start, you say you graduated, is that a PhD? If it's a PhD, then yeah, you would probably start off on a pretty decent salary. But if not, again, there's a bunch of people with bachelor's degrees over here that are, pining for great jobs. And then they start them off on like entry level, like sort of 30,000 pounds a year, and you have to work your way up. So, it's more like an internship with a progression. So yeah, it's very, very difficult. So I'm not going to tell you, yeah, definitely do it. Just move to England, because that could be an extremely difficult situation for most. Depends how much you want it. When there's a will, there's always a way. So yeah. All right, let's move on to copper now. So copper, we're gonna employ the same system. So we're gonna look at the monthly chart first. Look at a bit rangy, but keeps pushing higher and then whacking downwards. So maybe that's a pattern. I have one of the dogs in here, Astrid Mimi. She's just chilling there. So let's do this, just for reference. So that's what happened 3 times. So I don't really use trend lines. It's just interesting that there's that pattern. So I wonder, maybe if we get back up into this, I'm going to leave this on my chart. I'm going to lock it and save it. And then let's see what happens in the coming weeks. But similar to gold, it seems to be having trouble around a particular zone. So we keep trying to tag 540. Every time we do it, there's a big sell-off. So 540 seems to be the new 50. Don't see any high quality zones. On the monthly chart, everything is overlapping. So let's go to weekly. Same outlook, a bit of a range. Any high quality zones? No. So weekly looking messy, but also in some sort of a distribution with maybe a bit more of a trend than gold, because gold was really like whoosh, just like flat, like soldiers. All right. Oops, did I change? I didn't mean to do that. I am going to go back to GC here. Okay, so that didn't get touched. I'm going to go to this chart. All right, all other drawings are saved. That's nice. All right, I was on the weekly, wasn't I? Messy, right? Here's the thing. Some people be like, but D, there's a good quality supply at 515. It doesn't have follow through. It just has like one big flush out candle. And then, so here's the thing. Whenever I'm looking at supply and demands, I would want to see a flush, then a follow through. Why? Because that means we're not shopping around after the big flush. Somebody else is interested in taking it further. So 2 candles on any time frame with a big move away, that's what you want to see. So nothing to see here. Daily chart. Bit messy again. Seems to be creating a bearish engulfing. So that could be something if we get the follow through today. But right now, all I'm going to do is I'm going to mark this whole thing as one massive supply. The edge of that supply is 489.80. Do I have any interesting levels? Yes, I have 490, which was the former put support. So 490 could be retested, and then I would want to see what happens there. The odds are for the shorts to happen, right? The odds are for the shorts, but if they don't, we also need to have some alternatives. Now, the former levels of interest were up at 95, whereas now they've kind of come down. So, is that bearishness of market participants? Maybe. But when I look at where we are located profiles-wise, it's also not looking that juicy. So it's not high quality setups just yet, especially not for London. But maybe we can do the same thing for copper and look at the COMEX values. So for you know, complete picture, London opened inside value and very quickly pushed outside of it. We're currently sitting below the initial balance with one set of single prints. So if I mark that on the chart, this was the beginning of London. So that's the initial balance. Let's make that red. The value area, low, because that's what we're looking for, was 485.95. 485.95. So it tried to go higher, but ultimately just smacked back down. So now we have a London high at 488.70. That could be an orientation point. And we have a mini tiny single print. Why do I say tiny? It's because it's really, really small. So it's literally just like 4 or 5 ticks. That's nothing. If it gets closed, meaning if we go back to touch at least the initial balance low at 484.50 ballpark, I wouldn't be surprised to see this chopping up to VWAP at 485.40. That's Globex VWAP. And then maybe we get a decision point. But for now, I have a bit of a clash in what I'm seeing. So we are reaching a call resistance and a gamma wall at 484. That could be a stopping point. But what I would like to see here, and there's no value acceptance because we already opened inside value. You can't re-accept it. I mean, you can, but that's not really the best outcome. Usually those setups fail. So in order for the core resistance that is currently, it was a core resistance, it's now more of a gamma wall at 484 to bring some fruitful trades on the long side, I would need to see a failed auction. And that means we're going to hit VWAP. So then I have to see VWAP. And then we have this whole thing, which is a big consolidation. I don't like that. This is a low quality setup. It's a low quality setup, however I'm going to look at it. It might work, but it's a low quality setup. So the better outcome here would be to take in the information from a massive time frame and go, okay, well, I have 490 as a level of interest up here. And I have 484 as a potential line in the sand. Either as a accelerator to the downside or as a potential for longs if we hold here for an extended amount of time. So we have to stay here for quite a while. Let's have a look at where the ADR and ATR, ADR and ASR are located. So 493.40 is the ADR high. Quite far away. Also where today's projected options volatility area is. So yeah, it's massive. Would also go into this localized supply, which happened, was it a Friday? Yeah, that was a Friday. So around the Friday's low, that's where the extension of the move could happen. And then to the downside, just to keep everything equal, we have the average daily range low at 477.60. And what do we have at 477.60 in the options? Again, projected, yeah, they're very similar with the ADR stuff. So we have GEX1 at 480, but if they really start to run it through, I don't think the GEX1 will be enough. It might be, but usually when we're so high up in the distribution curve, sort of signs of more shorts coming in, you know, it's going to be a tough one. So if I do want to get involved around 480, I would want to see at least like a good 2-candle reversal on a 15-minute chart at the right time of day. Too late, don't want it. Too early, probably also don't want it. Difficult chart for me, copper. Right, let's have a look at chat. Chaos saying gold short or long. Well, short, but not from here. Short from higher up. High probability levels. But again, follow your own plan. I'm just giving you the outlook here, right? So we've just done copper. Go back and look at, here's the issue that I have with a lot of traders. They're like, they sit down and immediately they're like, so when do we click a button? Whoa, hold your horses there, mate. And they're like, what do you mean? It's going, it's moving. And I was like, yeah, let's breathe first. Is this a good opportunity? Is this area that gold is sitting now decent enough to give you the most money for least amount of effort? Or do you want to do it the other way? Do you want the most amount of effort, complete hell, stressful, for least amount of money? I know what I'm choosing, right? So when people are like, gold, long or short, are we going now? Dude, it's Monday. Just very early on a Monday. That's how you get yourself into trouble on Monday, by rushing, right? You're rushing. You're like, oh my God, first trade, click. Oh, you lose. Oh, that didn't work. Oh, click. Let me get it back. Oh, no. Now that one lost as well. At that point, you need to censor yourself and just go, I need a ham sandwich now. Yeah? So patience. So gold for me is neither one or the other. I think we are in a distribution. If I can get shorts somewhere from 33.70, if the price action agrees that everything else permits at the time, and we don't just shoot through it, there might be a short, but not right now. Right now, random walk. If they were going to do something with it, they were going to do it already. Since they haven't for 2.5 hours of London, this is now the standard London meander that we get probably about 60-70% of the time for this time of day in London, which is why, for me, London for the first 2 hours, 3 hours is DAX. It's not gold, but we don't have DAX, so there's no point talking about it until we do get it. Trader Ken says, IT recruiter, what have you not done? I had a few lives, yeah, and I'm somebody who likes to learn. When our company started to do reasonably well, I wanted to make sure that I know how to recruit, because I wasn't gonna. Okay, so a bit of a weird stance here for me. I'm a bit of a control freak, right? So if I'm gonna be working with someone every single day, I want to know who I'm getting involved with. And going to work for an agency to learn how to do that properly, that was a part of it. But then I kind of liked the whole aspect of talking to different people and finding out a little bit about their lives and, where their goals are. And it was hard. Like, it wasn't just like, oh yeah, you sit down and suddenly you get a bunch of money. It's a hard graft, there's a lot of calling to do. And then I also had a bit of a hang up because I was a musician for a long time, and I had an aversion to calling, to like just the sound of the phone. It was like anxiety inducing. So I wanted to find something that would break me away from that mindset. I wanted to get more comfortable talking to people. Is it coming out that I'm a bit of a weirdo? If I know people, I'm super happy to chat. But, and I know that it's probably very odd coming from somebody who chose to go into this line of work. It's like, oh, I don't like talking to people. But it was definitely a big hang up of mine, where if I had to chat to someone I didn't know, I would be like all tongue-tied and I didn't know what to do. So I decided to go into 1 year of working for an agency to break through that problem of mine, and it worked. It really worked. So now you can't shut me up. But back then, the first call that I was supposed to do with my candidate had a whole full script, and then the guy went off script. So I was like, F this, okay. And then I just started chatting to him, and then I realized it's not as bad. Obviously, some people are more chatty than others, which I also found out. So you had to almost like stir the conversation in the right direction so that they don't go off on one. Because, we call them up, and sometimes for people that have been out of work for a long time, especially, in and around COVID, we had some people who, obviously got let off, and then a few months into it, it was difficult for everybody. But then the recruiter calls them, and they're like, "Oh wow, yes, somebody to talk to." They're pretty lonely, and they haven't talked to anybody, and then they just start going off on one. It's like, yeah, just adopted a dog from Battersea Dogs Home, and it's going well. And I was like, okay, just what sort of hours are you looking to do? Is it remotely, or do you want to, would you be opposed to going into the office? Yeah, but the puppy training, do you know anything about that? And I was like, well, yeah. And at that time, I only had 2 dogs. I was like, yeah, I do, but, let's just kind of stay. It was a funny old job. But yeah, definitely helped me to get a little bit more outgoing, I suppose. Yeah. What is the indicator on the right of the chart? VPVR. Full name, volume, profile, visible range, as Texas Red told you. Trader Cat says, that's the gist, talking to people. I own an IT firm, but I'm like, do not call me unless shit is going wrong. So I'm really good at anticipating the need, so no time for chat. Good to trade. Yeah. That would be, I think, the ideal thing for everybody who's in tech. I think we're all a little bit introverted. And again, yes, I was a musician, but I was an instrumentalist. And I did do singing, but that's just like, it's like a script, right? You get up there, you do your thing, and then you come off and you don't talk to anyone. I was always a little strange on that side. Yeah. Gold looks creepy. I agree. Yeah. But at the same time, looks better than copper. I think copper looks creepier. Are we due for a pullback? I mean, my thinking is that until we actually get signs of recession, like what is gold doing over 33.40 and higher, Fear mongering? I don't know. Are we preparing for a semi-apocalypse? Don't we have like a couple of semi-apocalypse threats? Do we have? Are we going into buying machete and leather shoulder pauldrons, Mad Max style? Buying gold and a machete. I don't know. So we'll see. It's like bonds are in a very precarious moment right now. Like there's something going on that is not adding up. So I think everybody who's been in the industry is seeing that. Usually there's like this natural relationship when things are happening between equities, bonds, and gold. And yet we're seeing equities kind of doing some really irrational moves again, whilst bonds are largely not following. And that is kind of worrying at the very least. These bad numbers last week, they were bad. Like it wasn't just like, oh, this is a little miss. No, it was like terrible. And yet they went up. It's like, is this the institutions, or is this like the hungry-eyed retail traders going, well, it's a long because we sold off and then click. So now we got pushed back up by a whole bunch of speculators who are very kind of narrow-minded a lot of the time. And the big boys are just not even there. They're like, we're just sitting on the sidelines. We're going to get you all. And, I just worry with the equities. And, I wanted to also have a look at least ES. I mean, is this a move? And again, let's do the same due diligence, right? These are the levels from last week. Don't worry about it. How far are we from this weekly top? Pretty far. We're in rollover now, so it's going to get weird. But do we think that this is still... is this normal? Tariffs! oh, actually, tariffs not so bad. Bye. Like, I'm just seeing a whole bunch of high on hopium behavior in here. Is it possible that this goes into a new high? Yeah. Is it possible that we might have a recession on our hands at some point? Well, it's more likely than not. Like, tariffs are eventually going to trickle down to the consumer. That's where the issue will be. So I'm a little mistrusting in long-term longs that are getting involved right now. Again, I could be wrong. But he's just looking at that relationship between the different asset classes that traditionally have a particular feel to them. Something feels off. And I'm not a bonds trader. Maybe we can ask Jack later on what he thinks. But yeah. Gold up at the highs, equities up at the highs. It's like something's not adding up. So it's going to be interesting. I'm not sure we're going to get the summer doldrums again, especially not if the numbers keep coming out like pants. Really crap. But yeah, we have some big numbers coming out this week as well. So as I'm nearing the end of this stream, I'm going to warn you guys to keep an eye on the bloody calendar. I do not want to hear anybody go, what was that? It's like, that was the release that you're supposed to know about on Sunday, not on the day when it's happening, and just go, heart attack. So yeah. Do your plans, do your calendar, and prepare yourself for the week. Your job is to know when you need to stay out of the market. Well, the big four, NFP, PPI, CPI, FOMC rate decisions, those are certainly the big four. And there are others that can cause a little bit of trouble. But this week, we have CPI on Wednesday, my time, so over in England, at 1:30 p.m. That's the first one, right? So make sure you know all of the releases that are coming up. Lido, Money Brain Gang, okay, change your handle enough, but I'm glad you keep the first part of it so I know who you are. He says, I like to use Financial Juice. Me too. That's what I use. And I signed up for Truth Social to keep an eye on any Trump tweets. Yeah, I don't know. Trump tweets to me have helped me more than hindered anything. Depends. Right. Okay, I mean, I've got nothing else here. Don't think we're at any levels where I want to trade at the moment. So yeah, why don't we finish up a little bit earlier here and, start the week right without rushing and without, please don't go digging holes for the first 10 minutes of the next active session, or trading off levels that are very wishy-washy, especially on a Monday. If you have a bit of a buffer throughout the week, you get to Thursday and you're up like 3 or 4K and you're like, hey, yeah, I mean, let's spend some money on nonsense trades. You can do that. Just don't go derailing it. But again, try to breathe. If anything irks you, take it slow. Look for understanding over clicking trades. And let's begin this next week of summer. So because we are in June already. June can be a sign of summer doldrums as well. So if you get a range-bound day, don't go crying, saying, oh, no, it's a shit day. It's summer. It's normal. Rollover plus summer months, they could be unwinding moves because they're switching to a new contract, but it... Yeah. Burr says, starting the week with minus 1,000 is the way. And then a Mandalorian. Bruno, you have a great sense of humor, man. You always make me laugh. Anyways, let's take it slow. And thank you for being here with me. Trader Ken, I cannot rush because my payout request is on, not off my account yet. 3 days still holding on. Do you know what? That's actually a good thing. I actually like the fact that I have to wait. Don't know how I feel about this new dashboard and everything. You know, it's pandering to the instant gratification, instant this. Oh, I passed now, therefore I need to go into an XFA. Hold your horses. Your dopamine levels are just floating all over the place, and you're like, yeah. Let me ruin the XFA as soon as possible. You know, I'm maybe old school, but I think that us as traders need to be like having some breaks there. But yeah, that's a great way to start the week. Hey, can't trade, wait for a payout. Go Trader Ken. Okay, let's finish it up. Again, thank you so much for being here with me. If you're interested more in my methodology, check out my Twitter. Well, there's not that much there because I'm a bit random on my Twitter and a little bit quiet, but there's a ton of videos on my own channel, which is also underneath this video that Topstep very kindly put for me. You will see me tomorrow on Lunchbox Trading with the lovely Anne-Marie, who joined us here in the chat today as well. So yeah, let's take it slow. Let's slow it down, size down, at least at the beginning of the week. And let's do this right. I will see you all tomorrow for another episode of Eurotrade. I'm Marcus Stokady. Enjoy the rest of your day.